I often get asked questions like, what is my favorite dividend stock across the market? Or questions like, which dividend stock do I think has the highest upside potential from where it's trading at currently? Now, those are both great questions. And in this video, we are going to do a deep dive into a safe, high-yielding dividend stock that has been beat up like crazy as of recently due to higher interest rates. But what I think could have some massive upside potential from here. Now, the stock that I'm talking about that's offering all this is none other than Realty Income. Realty Income is just around $1 away from closing in on a new 52-week low. And with the way that Realty Income has been trading as of recently, it has dividend investors like myself more and more interested in grabbing more and more shares and locking in a massive starting dividend yield, which is exactly what I've been doing. Now in this video, we are going to analyze Realty Income from head to toe and show you exactly why, in my opinion, Realty Income does have one of the highest upside potentials for a long-term dividend growth investor from here. Now stick around because we're going to go through everything. Right after you, please drop a like on this video and subscribe for more future content like this. So first things first, looking at how Realty Income Corporation has been trading as of recently. Realty Income is currently trading at $56.20. The 52-week range low is $55.50. And what's crazy is that the 52-week range high is $68.85. And even though it seems like Realty Income has been under $60 for a while now, this high quality real estate investment trust was almost at $70 per share just back in January. But looking more into Realty Income's performance, the stock is down 11.91% year to date and down almost 18% as far as the last year time frame. But zooming out, Realty Income, just as far as share price return alone, is up over 600%. So even though some dividend growth investors have been freaking out as of recently, that Realty Income is back down in the mid 50s. For dividend growth investors that have a longer time horizon, this stock, in my opinion, could be a massive upside potential for those investors that have some time on their side. Now, before I share the exact reasons why I think that, let's first look a little bit deeper into Realty Income and get everyone up to speed with what this real estate investment trust has to offer. Realty Income got its start in 1969 with a single investment in a Taco Bell. And now today, this REIT owns thousands of properties across America that are leased to hundreds of tenants operating in dozens of industries. Retail properties account for most of Realty Income's rental revenue, with industrial warehouses generating some of the additional. Now, all of Realty Income's properties are under a long-term triple net lease agreement, which means that the tenants pay for things like maintenance, utilities, and even taxes. Now, impressively, Realty Income has paid uninterrupted dividends since the firm's founding and has increased dividends each year since going public in 1994. But stay tuned because we are going to look closer into the dividends in a little bit. To look a little bit deeper into Realty Income, going on the website, they have over 13,100 commercial properties under the net lease agreements, a 99% portfolio occupancy, which means basically, for the most part, every single one of their properties are being leased right now. Over 1,300 different cities and 85 different industries. This is a high quality REIT that is heavily diversified. Now, what's also crazy about Realty Income is that a lot of us actually step foot in Realty Income's properties, a lot more than we probably even realize. Realty Income leases to companies like Dollar General, Walgreens, Dollar Tree, 7-Eleven, Wynn Resorts, FedEx, LA Fitness, and many, many more, just to name a few. Now, this right here is maybe one of the most bullish aspects of Realty Income, in my opinion. It's the fact that the property diversification type is made up of mostly retail. Now, especially knowing the type of tenants that Realty Income leases to. These are tenants, these are businesses that are going to be around, whether the economy is good, whether it's bad. It doesn't get much better than leasing out your properties to recession-proof businesses. For me personally, as a long-term dividend growth investor, I have been buying hundreds of shares of Realty Income over the past few months, while it's been trading down very close to the 52-week low. And I think it's really important to understand why a lot of the real estate investment trusts are doing so poorly as of recently. And one of the main reasons why is, of course, because the very, very high interest rates that we have right now in America. Now, the Federal Reserve has interest rates currently at 5.50%, which of course makes it very, very expensive for a real estate investment trust to borrow money to buy more properties and expand, or to even refinance current debt that might be close to maturity. But if you look right here at the Fed rate monitoring tool, this will show us all the exact probability of the future rate hikes or rate cuts or whatever's going to happen with rates in the future. And of course, this is all just based off probability. This is not necessarily for sure what's going to happen, but a lot of time the Fed rate monitoring tool is pretty much spot on. And what's crazy is that the Fed rate monitoring tool thinks that by the next Fed meeting in around 2 weeks, the September meeting, that we are officially going to see a pause in rate hikes, which is definitely pretty crazy considering the Fed has been raising rates, it feels like nonstop, for over a year now. But what's even more important and more of a reason on why I'm so bullish on Realty Income is looking at the future Fed meetings. In November, there's also a better probability of another pause in rate hikes, but there still is around 33.5% probability that there might be another 25 basis. But looking out even further from there, because of course I'm talking about buying Realty Income and holding it over a long-term time horizon. In December, it looks like there's still a very good chance that rates stay where they are. And then in January of 2024, it looks like more of the same. And what's important to notice is that as we get further and further out from where we're at currently, there's more and more probability that we'll actually see rate cuts in the future. So much so that by May of next year, which relatively speaking is not that far away, there's a really good chance that we could see interest rates down to 5%, 4.75%, or even maybe lower than that. So of course, where interest rates are going to be in the future, your guess is as good as mine. But the probability that there is going to be pauses in rate hikes and even the idea that the Fed might be cutting rates in the future is definitely very, very bullish for real estate. Now, even though, as we saw here a second ago, Realty Income's share price does have the potential to really move up as we've seen historically. For a lot of long-term dividend growth investors, they're buying Realty Income at least partially because of the dividend. And if you look at Realty Income's dividends paid on the max time frame, I started buying my first few shares of Realty Income in around 2018. And during this time, Realty Income was paying just around 20 or 21 cents per share. Now fast forward just a few years later, Realty Income is paying almost 26 cents per share every single month. And what's great about this is as Realty Income has continued to play on the offense and continue to acquire more and more high quality real estate, and then of course from there collect rent on a monthly basis, the investors of ticker symbol O have also been rewarded with bigger and bigger payouts on a monthly basis pretty much every quarter or so historically. Now looking at Realty Income's up and coming payments, Realty Income has actually raised their dividend 2 times in the last 6 months. And with the current cadence that Realty Income has been raising their dividends, I would not be surprised personally within the next few months if Realty Income does another dividend increase. Looking at some more data, over the last 20 years, Realty Income has raised their dividend around 5% every single year, which is not bad at all for a REIT. This stock has 28 years of consecutive dividend increases and 54 years with an uninterrupted dividend streak, 54 years. So where does Realty Income go from here? Now in the near term, in the short term, it's very likely that Realty Income could see some more trouble because of the current situation with interest rates. But longer term into the future, maybe next year or the year after that, once interest rates start dropping, I think Realty Income and the entire REIT sector is going to flip and start moving up drastically once again. So in the meantime, for me personally, buying shares of Realty Income and getting a starting yield of around 5.5% with also consistent dividend raises. At least that's what we've seen over the last few months. And of course, the potential for Realty Income to be back up to $60 and above very, very soon here, especially if we see the Fed pause rate hikes or even cut rates sometime near in the future. I think buying shares of Realty Income right now, locking in a good starting dividend yield, and then of course seeing some massive price appreciation from here is a no-brainer for a dividend growth focused investor like myself. But when it comes to Realty Income Corporation and all this REIT has to offer, what are your thoughts on Realty Income as of currently? And are you personally buying shares of ticker symbol O as of right now? If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.